After a massive rally last week, the stock market is finally tanking. The Nasdaq Composite just suffered its worst week since April, recording a drop of 3% this week as major tech names took massive hits and investors' confidence wavered. The S&P 500 posted a loss of 2% this week. So what's really going on behind the scenes? With the Federal Reserve cutting rates and tech earnings still holding up, why is the market sliding? Is this a warning sign or just a correction? What's good? Julian here. In today's video, we will be breaking down why the market is falling and what I'm watching in the charts right now. So grab your notebooks and pens, put on your glasses, and let's get into business. Let's go. Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video. So if you watched my last video, you wouldn't be surprised at all, because I talked about how the fear and greed index was showing fear even when the markets were rallying. And this kind of divergence is often a warning sign that something big is coming. Well, fast forward to this week and you can see that the stock market has finally caught up with that fear. Right now, the fear and greed index shows that the market is sitting at an extreme fear, 21 at the time of this recording. So the question is this: why are the markets tanking? Let's start with the obvious. The market is under pressure. It's becoming more and more evident that the US economy is slowing down. We have massive layoffs happening across multiple sectors. The labor market is clearly weakening, and this time there's an added twist. Because of the ongoing government shutdown, there are no official job reports being released. This means that the key data like the monthly employment report and jobless claims haven't been updated for weeks. In fact, this government shutdown is now the longest in US history, 39 days as of this recording. So with no official data, how are the Feds trying to figure out what's happening in the job market? The analysts and investors are turning to alternative sources like Challenger, Gray, and Christmas, which just reported that companies announced over 150,000 layoffs in October, mostly due to AI automation, cost-cutting, and weaker economic conditions. Companies are tightening their belts, and many of these layoffs are happening in tech, finance, retail, where AI is replacing traditional roles. But here's where it gets confusing. On one hand, Challenger, Gray, and Christmas is reporting that there are over 150,000 layoffs in October, while on the other hand, the recent ADP report shows that the private sector actually added 42,000 jobs in October. So you might be wondering, how can both of these be true? Well, the ADP actually tracks payroll, which means people who got hired or left jobs just last month. Challenger, on the other hand, tracks layoff announcements, what companies plan to do in the coming months. So while ADP is looking at what's happening right now, Challenger is showing what's about to happen. That's why the data seem to clash. But in reality, they are both painting different sides of the same story. Some companies are still hiring, but the bigger picture shows that more are preparing for cuts. It's like the job market is starting to lose balance. Part of it still looks okay on the surface, but cracks are forming underneath. So this is exactly why investors are getting nervous, because the economy is showing early signs of strain, just as the Federal Reserve are starting to cut rates. Now, the second big thing that everyone else is watching this week, CPI or Consumer Price Index. This is one of the Federal Reserve's most important indicators for deciding what to do next with the interest rate, because it tracks the US inflation rate. But here's the problem. With the government still shut down, key agencies like the Bureau of Labor Statistics haven't been operating normally. This means that a lot of the data that the Federal Reserve relies on, things like unemployment numbers, wage growth, consumer spending, they are either delayed or incomplete. So this brings us to a bigger question. What if the Federal Reserve doesn't even get the CPI data at all? Normally, The Federal Reserve uses the CPI and PCE data to decide whether to raise, pause, or cut rates. But if that information isn't available, they are basically flying blind. So here's what happens then. The Federal Reserve has to rely on alternative data, things like private inflation trackers such as the job opening sites like Indeed, ADP pay data, or like the example that I shared earlier, Challenger Gray and Christmas reports, to name a few. They also look at other market indicators such as bond yields, break-even inflation rates, and also consumer surveys to estimate how inflation is trending. In short, no CPI data means more uncertainty, not just for investors, but for the Federal Reserve itself. Because without verified data, the Federal Reserve will likely turn cautious, delay major decisions, and avoid aggressive rate moves until things become much clearer for them. Just like what Jerome Powell said.
If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say, we really can't see, so let's slow down.
Imagine being in the Fed's shoes, trying to make trillion-dollar decisions without their most trusted data. And when the people controlling monetary policy are uncertain, that uncertainty spills into the markets. And at present, the likelihood of the Federal Reserve continuing to cut interest rates in the upcoming FOMC meeting in December is now at 66.9%, down from the initial 82% exactly 1 month ago. This is why we are seeing volatility spike, sentiment drop, and investors rush into safe haven assets. It is the uncertainty that's driving the fear, the volatility, and the sell-off that we are seeing right now. Now let's talk about what's really pulling the market down. Tech stocks. Over the past week, the Nasdaq just recorded its worst week since April. Big tech names, the same ones that have carried the market for most of this year, are now the ones leading the decline. Nvidia has been hit especially hard. The stock is now on track to end the week down more than 10%, and investors are growing skeptical about whether AI-driven growth can keep up with its sky-high valuation. And just when things couldn't get worse, Nvidia CEO Jensen Huang says that he will be ruling out China chip sales over US-China trade tensions. And that statement alone wiped off billions from Nvidia's market value. Tech now makes about 30% of the entire S&P 500. So when companies fall, the whole index feels it. And even if other sectors hold steady, a sharp drop of just a handful mega cap names like Nvidia, Microsoft, Alphabet can drag the whole market down in a big way. So for now, the charts are clear. Tech is leading this sell-off, and until it stabilizes, volatility will still stay high. So with that said, let's head over to the charts to see what I'm looking at for this coming week. So let's take a look at SPY first. As you can see, SPY ended the week with almost a 2 to 3% drop. And this was a reminiscence of what happened in 6th of October, just the month before that. You can see it was almost about the same length, about 3% as well. So right now, what I'm looking at is this. The good news about the difference between this crash compared to the one on 6th of October is that last minute SPY actually pushed back up into this resistance. So this is actually a good news because it seems that towards the end of the day, the investors are still pretty bullish on SPY or would love to end the week in bullish consideration. So right now, I'm looking for this level here to hold. If this level holds, I can foresee that SPY will continue its movement back up. However, if SPY does push down lower towards the next week, we can actually see that SPY will likely come down to this level of support for deciding what to do. It could be a sideways movement, or it could obviously push up if it goes up higher, or go back down if it breaks this support. Next, let's look at Google. We can see that Google is almost reaching to my
target level of 294. However, before it reached there, it actually decided to make a pullback this week. What I'm looking for Google is for Google to hold this level right here. Of course, the next area that it will actually likely drop to would be this level at 268, which may seem like a possibility before it continues its way up. However, if Google does decide to push straight up from this area right here as well, it is still possible to go up. I will be looking very closely at this level of 268 if it does go down to this level, because this will be the deciding factor if it continues to go down to the next area or if it continues its movement up. Now moving on to Meta, which is one of the biggest dips that has happened since its earnings report. Since earnings, it actually dipped about almost 20% right now. As you can see, I did have a note to actually buy at this level at around 605, and Meta very nicely pushed all the way down to this level at 605 before going back up. So right now, I would love for this level to hold, and if this level does hold of 605, Meta is likely going to go up to this area right here at 630. And if it does want to go up some more, it has to push further up above this level of resistance to head over to this next level of resistance. But if it doesn't, very likely it will come back down to 605. But this area is actually very strong, 605. You can see right here, this is a very, very strong support. So I'm hoping that Meta does hold in this case. Next, let's look at NVIDIA. You can see NVIDIA's massive decline right here, about 10% to almost 12%. However, the good news is that it actually bounced back above this support right here. So this is actually good news looking at it from the weekly perspective. If I were to go to the daily, you can see right here, ended up Friday, very strong bullish push upwards. I do expect that NVIDIA will be heading towards this level of resistance before deciding on what to do. If it wants to go up, it has to break this level of resistance. If it does not do that, it will likely come back down to the support right here. Let's look at Microsoft next. Microsoft is at a very crucial point. This is the last level of support that Microsoft is at, and I do hope that Microsoft will be able to maintain this level of support, because if it doesn't hold this level of support and we continue pushing down, it might likely go down to around this area right here of 470. But if it does hold this area, it may go up to this level of resistance right here. Next, let's look at Apple. Apple has been moving sideways for some time right now, and Apple seems to be in a good spot, because as long as it holds this level right here, it has a chance of going up. If it does not hold this level, it might likely head down to this level at around 258. So let's see what happens to Apple next. Next, let's look at Amazon, which also happens to be one of the other tech stocks that have been performing pretty well despite the rest crashing. You can see right here that it's still holding this level of support. So I do expect that Amazon has a huge chance of pushing up higher to the next level, and my area of target for Amazon would be 287. Next, let's look at a fan favorite, Palantir. Palantir seems to be holding this level of support very well, and it seems to be pushing up back to this level of resistance. If it does break this resistance, more likely it will actually continue its way up. But if it does not, from this level of resistance, it will actually head back down to this support. Next, this is a request from one of our subscribers, Jackie Cheng 2022, who requests me to actually look at Sophie Technologies. So I'm actually going to do that right now. So you can see right here that Sophie has actually closed last Friday up very strong bullish. I foresee that it is likely going to go up to this level of resistance before deciding what to do. If it wants to go up further, it has to break above this level of resistance before it can go up. If it does not, it will likely come back down to this level of support right here. So for those of you who are interested in getting your company analyzed or getting any ticker symbol analyzed, just comment the name of the ticker symbol down in the comments, and I will look to pick your selection for the next video. Next, let's look at one of my favorite pairs, gold, to see what is happening to the gold market. Looking at it from the daily perspective, we can actually see that gold is still in a very much sideways movement. However, looking from the bigger zoom in, zoom out picture, we can actually see that it is still following a lower low and a lower high market structure, indicating that it still should be on its way down. However, the key important areas that I'm looking at is this area right here and this area right here. So right now you can see that market is playing in a sideways position. So right now you can see that market is actually moving sideways along this level of support and resistance. And if it wants to continue going up, it has to break through this level of resistance here. And if it wants to come down, it actually has to break through this level of support right here. So let's look and see what's going to happen to the gold market. And I hope that the next coming week will give a stronger indication of where the market will want to head towards. Now, I also want to take this opportunity to look at Bitcoin for a bit because Bitcoin has actually dipped by quite a bit. Right now, it is at this level of 100,000. And I would say that this level is absolutely crucial for Bitcoin to decide what's happening next. This is a very strong key level because you can see that this is resistance that has been broken out. So this area here is very, very strong. So right now, Bitcoin is back at this level right here. And if it wants to continue its movement up, it has to respect this level in order to head up. But if it doesn't, and if it closes below this level right here, I'm looking at it from the weekly perspective. So weekly itself is a very, very clear indication. If it closes below right here, we can actually see that there is huge possibility that Bitcoin will actually head down to this next level right here, which is about 80,000 level, this area here. So let's see what's going to happen.
So to wrap things up, the fear that has been building for weeks is finally showing up in the charts. We've got a weakening economy, a government shutdown blocking key data, and now tech stocks, the biggest driver of the rally, cracking under pressure. And when fear strikes, uncertainty rises, the markets loses its leaders. It's not just a pullback, it's a reality check. So here's the thing, it's moments like this that creates the biggest opportunity if you know what to look for. Because when fear dominates the headlines, that's when smart money starts planning their next move. So in this coming week, keep an eye on the CPI data, watch how the Federal Reserve reacts, and pay attention to whether tech stocks like Nvidia, Meta, to name a few, can hold its support. Because if they hold, we could see the market stabilize. If not, the next leg down could be sharper than most expect. Either way, I will be breaking it all down for you as always with the data, with the charts, and no hype. And if you found this to be helpful, help me out by hitting the like button and subscribing. And if you want to see how I put 5 of my traders through a realistic prop firm simulation with only 2 weeks to hit a profit of $5,000, then click the video somewhere around here. And I look forward to seeing you guys in the next video. Bye-bye.